Okay, Assalamu alaikum. Good day, audience. This is your SBR trainer, Mustafa. I'm Mirchawala from Mirchawala's Hub of Accountancy. And today we will be going to do the second question number 2 of latest December 2020 attempt. But as this question includes some ethical issues, that's why I want to give you some introduction of ethics related. And believe me, these are the very easiest marks, scoring marks. Or I must say the question number 2, if you see all previous 6, 7, 8 attempts, question number 2 is normally the easiest, and it is the question who helps you crossing the 50 marks barrier, right? Okay, so be careful. Now, in SBR paper, don't forget this statement that first there will be an accounting issue, and then there will be an ethical issue. Normally, this is the examiner practice. They will give you ethical issues related to accounting. They will give you ethical issues related to accounting. So always there will be some accounting issue, and then there will be some ethical issue. For example, see, I've written some example. uh, for example, you got some impairment hint, and now you need to calculate, now you need to do impairment testing. How you do impairment testing? By computing recoverable amount, by calculating recoverable amount. And how recoverable amount is calculated? Higher of fair value less cost to sell and value in use. And how value in use is calculated? Present value of future cash flows, present value of future cash flows. So now, as an accountant, you can manipulate artificially, increase the future cash flows, future cash inflows. So if you increase future cash inflows, so automatically your present value will be higher, so your value in use will be higher, so there will be no impairment. So see, you are manipulating your financial statement. You may manipulate your financial statement uh, through this issue, right? So first there will be an accounting issue, then there will be an ethical issue, right? Okay. Similarly, they may ask question related to related party. That means you are giving favors to your family. So family transactions are normally related party transactions. So see, first there is an accounting issue, then there is an ethical issue, right? You are not doing good with the shareholders. Then similarly, uh, you have seen the three activities in cash flow. Last in the last revision day we discussed the cash flow. In the cash flow there are three activities: operating, investing, and financing activities. Operating, investing, and financing activities. Now, normally out of these three activities, shareholders looks at operating activities very carefully, because operating activities are principal revenue generating activities. Operating activities are ongoing activities, or operating activities are the activities for which organization is made for. So normally all CFOs, they try to increase the operating cash flows. So what they do, they sometimes shift cash flows from investing activities to operating activities. That's also unethical. That's also even not allowed by IFRS. That there is an inflow of 1 million which is related to investing activities. There is an inflow of 1 million which is basically originally related to investing activities, but you are going to book in operating activities. So again, see, first this is an accounting issue, and then this is an ethical issue, that you are manipulating accounts. You are presenting wrong picture to your shareholders. Okay, so this is a little brief intro about this ethics, that first there will be an accounting issue and then there will be ethical issue. Now, I have written few lines on this. Listen, how to write on it, listen. Sometimes they give you separate requirement for ethics, right? But sometimes they give you combined requirement of accounting and ethics. So what you do when dealing with ethical requirements, see, this is, some students follow this structure, and this is in many questions you can apply it, right? Import the First of all, import the situation from question, and identify and identify the accounting issue which will apply. Usually 0 0.5 marks is given for correct identification of accounting issue. First of all, first of all, you need to copy paste. First of all, you need to copy paste. Just import the issue. Just import the accounting issue. That this is the issue which is creating problem. Okay. So you normally get 0 0.5 mark for it. Now, discuss the requirement of relevant accounting standard. Write the actual treatment. Write the correct accounting treatment. Write the write the correct accounting treatment. Write the correct accounting treatment. Only those requirements which are relevant to exam. Apply those requirements to the scenario. Apply those requirement to the scenario along with the discussion. Okay, just simply do accounting discussion, IFRS discussion with that. Now, if possible, identify the heads which are affected. Yes, listen, listen to me very carefully. For example, if there is an accounting issue related to impairment, now, if you book this impairment, it will go in profit and loss. If you book this impairment, it will go in profit and loss, because normally with impairment you make the entry debit P&L and credit PPE. Normally with impairment you book the entry debit P&L and credit PPE, right? So if you don't book it, just think what will be the effect. What will be the effect? You will ultimately affecting your P&L. First, you will be affecting your P&L and profits, and the second head is the non-current asset. So what is it written? If possible, identify the heads affected. That because of this accounting issue, which heads will be affected? Which heads, like your equity packet will be affected, your non-current assets will be affected, your gearing will be affected. You need to identify it. Okay, right? Now, then, for each ethical issue, examiner gives 2 marks. 1 mark for discussion of the ethical issue. That means you need to discuss that issue first. Right? And 1 mark for advising a safeguard. What is the safeguard for that ethical issue? Means what actions as a professional accountant you need to take. What actions as a professional accountant you need to take. What actions as a professional accountant you need to take, right? Okay. Now, I have written some of the very famous safeguards which you need to copy paste. Normally these are the major safeguards which you need to write. See, import and identify the ethical issue which is creating in the situation. 0 0.5 mark for the identification. Briefly discuss how that ethical issue is created, and then finally, these are the safeguards. What are the famous safeguards? Listen to me. Discuss with TCWG. TCWG means those charged with governance, the seniors, that this is my issue, that somebody's pressurizing me, seniors are pressurizing me for unethical thing. So you go to TCWG. One thing which you can do is, if you don't have any option, then go for resignation. You can't do unethical act, because you are the member of professional body. Right? Now, one more thing you can do: take advice from professional body on accounting treatment. If, for example, there are different professional bodies like ICAEW. If you are in UK, you should go to ICAEW or ACCA, or if you are in Pakistan, it's ICAP. In India, it's this different body. So you can take advice from the accounting body as well. Now, take a legal opinion while not breaching confidentiality, such as reporting to ACCA or regulator, or those are affected. But keep one thing in mind: if you are going to disclose your company information in front of lawyer, if you are going to discuss, if you are going to take a legal advice from somebody, be careful, that you don't breach something related to confidentiality, right? Okay, because these are big limited companies, and if you leak out some big information, then this may create problem for you as well. Okay, so these are the some of the famous safeguards which normally you have to write. If you see the exam kit of SBR, if you see the major past papers, these are the most famous replies, these are the most famous safeguards which you write, most famous safeguards which you write basically, right? Okay, now let's move let's move towards the past paper. Okay, be very careful, and these are very scoring marks, and try to get the objective of these classes. Listen, the objective of these revision days to give you confidence. Okay, right? Now see this. This is your question. The name of the question is Calibra. The name of the question is Calibra, and this is December 2020 attempt, latest December 2020 attempt. Okay, something related to IFRS 15 and IS 23. IFRS 15 and IS 23 related to this. Okay, Calibra company operates in the property sector and has invested in new technology, distributed ledgers, blockchain. See, they are giving hints. They are giving hints for blockchain technology, the blockchain, that is the Bitcoin technology, right? Okay, but listen to me, this question is not related to that blockchain, not for from the accounting perspective. From the accounting perspective, they are not asking you the treatment of blockchain and all. Okay, so don't worry about it. Now, to trade and support property transactions, to support the financial year end of Calibra is 31st of December x8, 31st December x8. Okay, now the first requirement luckily is IFRS 15, and I must say that this transaction you have studied in previous past papers. It came in few years back, around 2016 or 17. This transaction came. Okay, now Calibra company builds apartment blocks which normally take 2 years to complete from the date of signing contract. Now we prepare we prepare apartments and then we sell it. We prepare apartments and then we sell it after the completion. Okay, the title and possession and therefore control, three words: title, possession, and therefore control of the apartment blocks pass to the customer upon completion of construction, right? Okay, now what we do, we construct the apartments, and in the end we deliver those apartments after 2 years or 3 years after the completion. So now you tell me one thing: when when customers get the economic benefit, from these apartments after 2 years, when we deliver it, when we give possession, when we give control of that, right? Okay, so that means we have signed the agreement with the customer that we will construct the apartment, we'll complete it, we'll finish it, and then we'll give you the delivery, and we'll give you the possession. So customer will get the economic benefit after 2 years. So that means from our side, performance obligation will be satisfied after 2 years. Performance obligation will be satisfied after 2 years. And hope you remember the rule. Of IFRS 15, that according to IFRS 15, revenue is recognized once you satisfy the performance obligation. So my dear students, you are going to satisfy the performance obligation after 2 years, when the customer will get the economic benefit. Now, so that means in this case you need to book revenue point in time. Once these units are completed, once these blocks are completed, then you will transfer it to you, then you will transfer it to customer, and then you will finally book the revenue. Now, one thing which may come in your mind, sir, can't we book the revenue over time? No. Hope you remember the conditions, extra things I'm telling you. Normally, overtime revenue is booked when customer gets the benefit simultaneously. Like in teaching, when we teach, you get the knowledge simultaneously, right? Okay. So in teaching, yes, we do recognize overtime, but here the case is different. Customer gets the economic benefit after 2 years. Customer gets the economic benefit after 2 years in one shot. Okay. That's why the revenue should be booked point in time. This is the first issue which you need to identify. Now, hope you remember the stage three of IFRS 15 about the transaction price. There is one very famous thing, significant financing component. Wait, what is significant financing component? There are two cases in significant financing component. The first case, sometimes you deliver goods now, listen to me, you deliver goods now and you receive cash after 1 or 2 years. You deliver goods or services now and you take cash after 1 or 2 years. So in this case, in the first case, listen, there is a material delay between the delivering of goods or services and receiving the cash. So in this case, you need to do discounting. In this case, you need to do discounting. This is the first case. And one more case you studied in your normal studies. Sometimes we receive cash now, sometimes we receive cash from customers now, and we deliver goods after 2 years. We receive cash now and we deliver goods or services, after 2 or 3 years. So in this case, according to new standard, this amount what you have collected now, right now, the amount which you have received from customers right now is treated as a loan. And you need to book interest for 2 years. You need to book interest expense. You need to accrue interest expense for 2 years, right? Hope you remember this. Now read this. The price which is payable on completion of each apartment block is 9.55 million. So the first option we are giving to our customers, that the first option we are giving to our customer is that we are going to construct it first, and customers going to pay after 2 years. After 2 years. So in that case, the after 2 years the payment is 9.55 million. Now one more options. Alternatively, customer can pay 8.5 million. Customer can pay 8.5 million cash on the day that the contract is signed. On the date the contract is signed. Now the chief accountant has calculated that this represents an appropriate borrowing rate of 6% for Calibra. That means us. Calibra company immediately recognized 8.5 million as revenue. Full time wrong treatment, wrong. If customers pays when they sign the contract. Now, my dear students, simple two options. Simple. If customer pays after 2 years, that means on the completion, then the amount is 9.55 million. And if they pay right now, so the amount is 8.5 million. Now, according to the latest IFRS 15, if customer pays now and they are taking goods or services after 2 years, so this advance amount is treated as a loan. Okay. Now, one basic evidence I'm giving you. All of you, just think like that. This is year zero. This is year one. This is year two. Year 0, year 1, and year 2. Now at the end of year 2 we are paying 9.55 million. At the end of year 2 we are paying 9.55 million, right? As a customer, customers are paying 9.55. Can you calculate the present value of this 9.55 using interest rate of 6%? Can anybody do this? Can anybody, or I must say all of you, please do this. Calculate the present value of 9.55 million. Calculate the present value of 9.55 million for 2 years using interest rate, using using interest rate of 6%. If you do it, dear students, it will be almost exact, comes to 8.5 million. So this is very simple. We can take their money now and we can use it. We can take their money now and we can use it. And the discount we are offering is equal to the interest. The discount we are offering to them for this upfront payment, the discount we are offering to them for this upfront payment is basically the interest, and interest should be spreaded over these 2 years. Interest should be spread over these 2 years. Okay, so now what should be the treatment? The treatment is, on the day one, this 8.5 million must be treated as a loan. But this guy is saying yes, 8.5 million for one block. This guy is saying 8.5 million we'll book in the revenue. This is wrong treatment. Why wrong treatment? Because according to stage 5, we have not transferred the control, we have not transferred the title, we have not transferred the possession. So we'll be transferring these three things at the end of year 2. That means we are going to satisfy the performance obligation at the end of year 2. So that's why we cannot book revenue now. Okay, so this is all the treatment of this first paragraph. Take your time and read it and think over it. Take your time. Now let's read the requirement. I'm not going to do ethical issues now. Discuss how Calibra company should have accounted for the sale of the apartment blocks in accordance with IFRS 15, revenue from contracts with customers, and one more IS 23 borrowing cost. Normally, IS 23 is considered as a non-routine standard, but see, it comes now. Why IS 23? Hope you remember IS 23. IS 23 is one of the standard which allows us to capitalize borrowing cost. That means we can capitalize the interest cost. But what is the condition? If we have taken loan, if we have taken loan to construct or produce a qualifying asset, if we have taken loan to construct or produce a qualifying asset. Now wait, what is a qualifying asset? A qualifying asset is an asset which takes substantial period of time to complete. A qualifying asset is an asset which takes substantial period of time to complete. Now wait, do you think we have met the conditions of IS 23? Yes, obviously we have met. See, we are involved in construction and they have openly told 2 years. So normally the definition of qualifying asset which takes substantial period. So normally substantial period is normally 1 year, around 1 year or so. Sometimes it is less than 1 year in some cases, but normally the normal interpretation is 1 year, right? So as this will take 2 years to complete, so yes, it is a qualifying asset. This construction whole apartments are qualifying asset. And we have taken loan from our customers. Basically we are taking loan, we are borrowing from customers now, and we are even paying the interest. See, 8.5 and 9.55, the difference is interest. So we are basically borrowing money from our customers on interest. So yes, this interest may be capitalized, this interest can be capitalized, easily capitalized, right? So we won't be making any entry of interest expense in this question. We won't be making any entry of interest expense in this question. We will be capitalizing this borrowing cost. This interest cost will be capitalized, because according to IS 23, if you take loan to construct or produce a qualifying asset, then that interest will be capitalized, and this is the case here. Now let me show you how we can write it so that you can get the writing as well. Listen, first of all, we are going to do requirement number A. No, there is one question, sir. No, better you don't write 1 year. Somebody's asking that, sir, should we write that qualifying asset is an asset which takes 1 year to complete? No, this is not the wordings of IFRS. You better write qualifying asset is an asset which takes substantial period of time to complete. This is the accurate wording, okay? And in some cases, I've seen some past papers of ICAEW, because I teach ICAEW corporate reporting as well. So in that past papers, they normally capitalize interest with 7 months to 8 months, the project with 7 to 8 months, right? And it also depends upon the audit firm policy. Like PwC has its own policies, EY has its own policy, right? Okay, so the better word for this is substantial period. Okay, now let's see how we can write it. I have written a sample solution for you guys for your motivation. Now listen, in this case performance obligation will be satisfied when these units will be transferred to customers. Simply you are saying to examiner, you have to write very simple, no need to be very complex. Performance obligation will be satisfied here when you will be transferred these units or these apartments to customer. That is upon completion of construction. Okay, so you are going to satisfy the performance obligation after 2 years. You are going to satisfy the performance obligation after 2 years. Okay, so Calibra should book revenue simply when the title, possession, and control of these units transferred to customers. That is at the end of year two. And if you want to write, you can write in bracket point in time. Point in time. Okay. So this was basically related to stage 5. This was basically related to stage 5. This was basically related to stage 5. Okay, and in stage 5 you have to decide point in time or overtime. Point in time or overtime. So simple is point in time, and we have given the logic. Now the second issue is stage 3. The second issue, dear students, in this question is stage 3. The second issue in this question is basically stage 3. Wait, wait a minute. Wait a minute. Wait a minute. Oh, yes. Sorry for the delay. Now, the second issue is the advance payment represents a significant. The second issue was stage 3. That was the significant financing component, that we receive the cash now and we will be delivering after 2 years. Now what they are saying, the advance payment represents significant financing component. The advance received from customer from must be treated as a loan. This is the simple treatment according to the new standard. This is a loan. Now IFRS 15 states that interest rate used for this loan must reflect the credit worthiness of party receiving. means us, we are receiving, we are going to receive the advance payment, we are going to receive the advance payment. So our credit worthiness is relevant. Okay, so interest rate used is the interest rate used is linked to the credit worthiness of the party receiving, that means we. Okay, so why there is one more logic. Hope you studied F9. When you go to take loan, when you go to take loan from any bank, they always check your credit worthiness and they decide the interest rate according to your credit worthiness. Okay, so the same thing IFRS is saying. Now, this is sometimes called as incremental borrowing rate. This is also called as incremental borrowing rate. And in your past papers, it also came. In your past paper, this thing also came with this name of incremental borrowing rate, right? Now, in this case, 6% interest rate is appropriate. 6% interest rate is appropriate. And also we have seen the calculation. We tried it using the discounting. We we tried it by doing discounting. Discounting using 6%, using 6%. Okay, now if 9.55 million is discounted using interest rate of 6%, we get almost 8.5 million. We get almost 8.5 million as a present value. Calibra should recognize a liability, or you can write the word loan, liability, or you can write the word loan of 8.5 million and accrue interest expense over 2 years. Accrue interest expense over 2 years. Yes, I have written right now the word interest expense. Right now I have written the word interest expense because this is the normal treatment. Because it is the normal treatment. But once I'll be discussing IS 23, once I'll be discussing IS 23, then I'll guide you to capitalize it. I'll guide examiner to capitalize it until it reaches to 9.55 million. Obviously we'll do unwinding and we'll take it to 9.55 million at the end of year 2. At that time, this 9.55 million will be transferred to revenue. The treatment given by the accountant is wrong. And students, don't worry about it. Whatever I have written here, I'll make the entries as well. Whatever I have written here, I'll make the entries as well. Whatever I have written here, I'll make the entries. I'll show you through entries as well. Even they have asked the entries in this question. You can read it. Now the last requirement is IS 23. They have also used the word IS 23 in the requirement. What IS 23 says, the first thing, if you have taken loan to construct or produce or acquire a qualifying asset, what is qualifying asset? Which takes substantial period of time to complete, then you can capitalize. You have to capitalize. You have to capitalize the borrowing cost, the interest expense. So in this question, we are doing construction which takes 2 years, so definitely we can capitalize. The interest should also be capitalized in accordance with IS 23, because in economic reality, has taken loan from customer for a qualifying asset which takes substantial period of time to complete. IS 23 states, now see, this is the wordings of IS 23. IS 23 states that borrowing cost IS 23 states that borrowing costs that are directly attributable to the acquisition construction or production of a qualifying asset form part of the cost of asset. That means we'll capitalize it. Form part of the cost of asset means we will capitalize it. Form part of cost of asset means we'll capitalize it. Now, as construction, very important line, as construction is the primary business of Calibra. Listen, I hope you remember this basics. Whenever whenever you buy properties for routine resale, you buy properties for routine resale, then this is your primary business. And now this property will be inventory for you. I repeat, For example, there are some people which are investors. They buy property for usage. Some people buy property for usage. For them it's fixed asset. For them it's fixed asset, okay. But some people buy for routine resale. It's their business to construct, to buy land and construct it and then resell all the apartments. So if you are buying properties, if you are constructing properties for routine resale, then this property is inventory for you. Then this property is inventory for you. So you can read the first line of the question I showed you. This is their primary business to construct properties. This is their primary business to construct properties and sell it. So yes, the property is inventory for them. This whole project is inventory for Calibra. So now we are going to capitalize it. We are going to capitalize the interest with the name of inventory, not with the fixed asset. We are going to capitalize this all interest with the name of inventory. See, that's why the construction units are treated as inventory. So this interest will also be capitalized in inventory. This interest will also be capitalized in inventory. One question. Sir, if the property is inventory, then how? Yes, inventory is also a qualifying asset. Inventory is also a qualifying asset. If you have studied IS 23, they have given the example of such some inventories as well. Some inventories as well, yes. Like maturing goods, maturing goods like wine and cheese, they take certain substantial period of time to complete. So if you have taken loan for such inventories, then you can still capitalize it. Yes, yes. Now just wait a minute and have a look. Have a look. Now, student, let's move to the second requirement. Let's move to the second requirement. Let's move to the second requirement. Provide, see, provide accounting entries that would be required to record the contractual sale of an apartment block on 1st of January X8 at the discounted amount over 2 years construction period. See, they are not asking you to sell it for 9.55, not that one, that advance thing. If you are going to receive advance, if you are going to receive advance from your customer, what will be the entry till the end? Till the end, believe me, this thing exactly came, I still remember, this thing exactly came in past paper when IFRS 15 was launched first time. And that was a current issue question, and they gave this question. I forgot the name of that question, but it this is a previous, this requirement came before 4 to 5 years, and this is present in your exam kit as well. So let's do it. Now, you received, today you received 8.5 million, okay? Today you received 8.5 million, 8.5 million. So what will be the first entry? The first entry will be debit bank 8.5, credit loan or liability, 8.5, debit bank 8.5 million, and credit loan or liability 8.5 million, okay? This upfront cash is 8.5 million is loan, okay? Now, over the 2 years, we will be booking the interest, we will be accruing the interest over 2 years, right? Now, But as we have to apply IS 23, as we need to apply IAS 23, IS 23, so this interest will not go in the P&L. We won't be booking interest as an expense. We will be treating interest as an inventory. We'll capitalize it. Okay. So what was the rate of interest? Tell me, what was the rate of interest? It was, I think, 6%. So 8.5 times 6% is how much? 8.5 times 6% is how much? Can anybody calculate? It's 0.51. It's 0.51. So normally in normal circumstances, what's entry we makes? Interest expense debit and loan credit. Interest expense debit and loan credit, but not for this question. This question we need to capitalize it. So we'll make the entry inventory debit. See this, inventory debit 0.51, and loan, we'll increase the loan 0.51. Okay, this is the entry, this is the entry. Now can you add these? 8.5 was the beginning loan and 0.51, so I think it's 9.01. 9.01, 9.01. Now what's the interest rate again? 9.01 times 6% is 0.54. Now it's 0.54. So this will be debit inventory 0.54, and credit loan 0.54. Now wait. Can you add these two? It will be 9.55. It will be 9.55. This is your loan final. This is your final obligation. And now once you will deliver, listen, it was written in the question that we'll give possession, we'll give ownership, we'll transfer the title at the end of year 2. So at the end of year 2, now, yes, this is our income. So we'll debit the loan and we'll credit the sales revenue or whatever the income is. Okay, so this entry is at year 2. These are the entries. I have made the horizontal entries. You can make it vertical as well. You can straight away. Okay, because some students finds it's easy to make timeline and all. That's why. Did you understand the entries? All of you, please reply on the chat box. Did you understand the entries? Please reply on the chat box. Thank you. Now we need to read the ethical part, which is very general part, and believe me, I personally feel this ethical part is the real life part. It's real life part. Even it happened with us, all of us. It may in you, when you guys will join the audit firm or the company, you will see this. This is very practical thing everywhere. Even in teaching, everywhere, these are ethical issues are very common, very common. So you need to write normally. You must know the ACCA code of ethics. What are the ACCA code of ethics which you have to write, and the safeguards which I told you. You can easily write it. Okay, the normal discussion you have to do. Now let's read the question. We did with the first paragraph. Listen, we did with the first paragraph. Now we are going with the second one. The chief accountant does not hold a permanent employment contract with Calibra company. Now the accountant who was doing this who was doing this accounting in the first paragraph is not a permanent employee. So now just make up your mind, as he needs permanent job now. So maybe he is pressurized to do something negative, natural. See, right now he is not on a permanent job. So to be permanent, to get the permanent job, he can do anything, right? Okay, now He has applied for the position on a permanent basis and is to be interviewed in the near future. So definitely he has to show good performance. He has to show good, he has to make the bosses happy. He has to make the bosses happy. And I must say, as I must say, listen to me, I must say that he in the last paragraph he booked complete revenue immediately. In the last paragraph he booked complete revenue immediately. So there is a possibility he's trying he really wants to shoot the profits. He really wants to shoot the profit to make their bosses happy. Okay, now a new name in the question. Bodoni company, a customer of Calibra company, wanted to take advantage of 8.5 million reduced price. Please don't sleep. 8.5 million for an apartment block, but was having problems with the cash flow. So this customer has some cash flow, but this customer wants this facility, wants to avail this 8.5 million thing, because obviously the 8.5 million is the reduced price. Obviously the 8.5 million is the reduced price. The chief accountant therefore allowed Badoni company to pay 8.5 million and to delay payment until 1 month after the contract was signed. See, this is against the shareholder interest. Against the shareholder interest. Normally, what's the rule? You take cash and then sign the contract. But what he's doing, he's signing the contract and he has delayed the payment. Okay, pay after one month. But in return, he's getting something. You scratch my back and I'll scratch yours. Something for something. See this. What consideration he's getting? Listen, Badoni company has agreed to provide a good employment reference. A good employment reference. The chief accountant of Calibra company was afraid that he might lose Badoni company as a customer. See this. Badoni company agreed to provide a good employment reference. First of all, what company is giving employment reference to this guy? So that is self interest, that is personal interest. So that means his objectivity will be impaired because he has involved in a personal interest transaction. Are you getting? He has given favor to that company. He has delayed the payment. In return, what they are giving to, they are giving employment reference. Okay, that will be useful for him to get a good employment. See, now the chief accountant of Calibra company was afraid so that he might lose Badoni company as a customer and referee if he did not agree the delay in payments. So one more thing, he's pressurized as well. He's pressurized as well that he may lose the customer. So this is basically the ethical issue which you need to write, and then you need to write the safeguard. Then you need to write the safeguard as well. Okay, so as a professional accountant, you cannot do such things. You cannot do such things. So this is the first issue. Now there is a second issue as well. Second issue as well. One more thing. Do you think one question? In in real life, I've seen this. Many people, they don't know something and they are doing that thing all over the world. All over the world, especially in developing economy, it's common. People don't know one thing and they do it. That's very bad. That's very, very bad. Horrible. Even there are teachers, they don't know subject and they teach. So that's also very wrong. That's also unethical. You are playing with the career of students. Now listen. Calibra company has recently used distributed ledger technology blockchain to sell shares. Wait, you don't have to do accounting for this now. This is not the accounting requirement. Okay. Yes, there is an article available. There is an article available on accaglobal.com on this blockchain technology and this all Bitcoin and all these things. And they have told us the treatment as well. And even I discussed this in my current issue. It's in my current issue video, also present on YouTube. Okay, you can see that. But in this question, it's not related to blockchain accounting, so don't worry about it. Calibra company has recently used distributed ledger technology blockchain to sell shares in a property to investors. these digitized transactions are only visible to the authorized parties. Now, this whole blockchain setup which they are going to enter in, it's all hidden and only disclosed to some people, only disclosed to some people. So that means everybody, there is a lack of transparency, there is a lack of transparency in this thing. One issue, the chief accountant publicly supports this technology and is to manage the new system. Now, this new accountant took the responsibility. Listen, this new accountant took the responsibility of whole this blockchain thing, right? Now, and he has publicly support that yes, it's a great thing, it's a great thing. Investors please come and do transaction with this. In public he has supported. Now, however, he has private concerns over the reliability of the due diligence carried out on the sale of property shares and the potential violation of local regulations. Just see the game. In public, this guy is saying everything is fine, this technology is excellent, go and invest, go ahead. But in person, he personally knows that this is a dangerous game. This is a dangerous game. He has doubt on the due diligence, on the reliability of due diligence. That means he's not satisfied. He is not satisfied with the transparency of this, of check and balance of this system. And plus, he has also indicated that potential violation of local regulations, that through this blockchain system there will be some violation of local regulation. So now just think, this that means he's not satisfied and he's doing this for others. So that's unethical, that's unethical according to the ACCA code of ethics. That if you are not satisfied with certain thing, if you have doubts, better word, if you have doubts related to certain things, that you should not refer that thing to others as well. Okay. Now, the directors of Calibra company want to increase the number of transactions on the distributed ledger by offering digital shares in the whole of the entity's property portfolio. Now, what the seniors board of directors want, they want to flourish it, right? Okay, obviously they want to earn. Although the chief accountant has very basic knowledge of distributed ledgers. Hope you remember the ACC code of ethics, due care and professionalism, you remember? So if you don't know something, you can't do it. If you are not expert of something, you can't do it. Wait, let me give you some practical examples. This came in ICAEW past papers as well. So in ICAEW past papers, normally, listen, they create some ethical issues like in there is an audit firm, and in that audit firm they have hired a junior accountant for such a big job. They have hired a junior accountant for such a very technical job like financial instrument defer tax, is 12 income tax, defer tax. Listen, so even you students don't know these standards properly. You guys have been studying for last 1 year or 6 months or so, but still is 12 financial instrument, these are technical standards. So there was a question in ICAEW past paper that audit firm hired a junior trainee for such technical job, and that guy is not competent. So if you are not competent and you are doing some certain thing, so definitely that's unethical. As a professional accountant, you should not now see openly. They have basically, he has assured the directors that he can facilitate this move. He has assured the directors that he can facilitate. See, he himself is wrong. They are pressurizing him to do it, and he's saying yes, I'll handle. Wrong. The project has been approved by the board despite the chief accountant's private reservations. Now, chief accountant has in person said that there are some problems, but still the board approved it. Because board wants to make the whole system with this blockchain, all properties. The chief accountant has only recently qualified as an accountant and wishes to be employed with Calibra company on a permanent basis. This is again self-interest. This is again self-interest threat. Okay. Now, one practical thing I want to tell you, and I have written this in my solution as well. Listen, you know, it is in the last line. This is very excellent hint by the examiner. In real life, practical life, you know, it's very easy to pressurize the new boys, the new guys, because the new guys does not have experience. They are new, they don't know what's the politics, what's the real politics of all these things. So it's very easy to pressurize them because of lack of experience. One more thing, because they want to grow, they want promotion. So for promotion they can do anything, because they see their seniors on high positions, so they also want to go to high positions, right? So that's why it's easy to pressurize the juniors, the new accountants. He's a new accountant. One more thing, normally at the beginning of the career your pocket is empty. Your pocket is empty. So the guy with empty pocket, it's easy to bribe, okay? You are getting? So this thing you have to write, this is a practical real life issue, that he's a newly qualified accountant, and you normally the seniors pressurize the newly qualified accountant very easily because of lack of experience, because they really wanted to grow, because they really wanted to earn. That's it. Now read this. Discuss the way in which chief accountant should have acted to ensure that he maintained ethical standards in dealing with the issues described. Okay, so now, just not the safeguard you have to write. Safeguard is hardly 1 or 2 marks. You need to discuss the whole scenario which is written in the question. Mm, one of my friend one of my friend, he is basically teaching in UK Kaplan, and sometimes we discuss on these, and he teaches the same topics like SBR and ICW corporate reporting. Okay, so he sometimes says this dialogue, that the difference between SBR paper and ICW paper is that in SBR paper, listen, you have to copy things from the question in SBR, because SBR is easy as compared to ICW, that is very advanced corporate reporting. Listen, in SBR paper you need to copy things from the question and in ICW paper you need to copy things from your exam folder, because normally ICW is an open book exam. ICW is an open book exam, so you take your exam folder with you. You take your exam folder and you pick things from your exam folders. But in SBR paper you have to take things, lot of things from your question. You'll see in the solution, lot of things are discussed from the question. This is very common statement. Okay, now let's move. Now listen, one of the ACCA code of ethics is due care. One of the ACCA code of ethics is due care and professional behavior. Due care and professional behavior. As a member of professional body, see, accountants should not perform tasks in which they lack expertise. I told you, if you don't know certain things, you can't do it. You are not allowed to do it. Okay. As chief accountant has basic knowledge of distributed ledgers. In the question it was written, see, I have copied it from the question. I told you in SBR exam you have to copy things from the question, right? That's why he should refuse this post. He should refuse this post openly. The first thing is, you are not eligible. Why you are doing it? Now he is even not sure about the reliability. One more issue, he is even not sure about the reliability of due diligence and local regulations compliance, the law things. As a professional accountant, this is against the integrity that accountant does tasks on which he himself has doubts. Now wait. Read this first. Read this first. Read this first thing. Okay, in very simple words, you have to write that you don't know certain things, why you are doing it. You are not allowed. You are not allowed. Now, what is the solution? One solution of this to is engage specialist consultancy. Wait, you know, there is a paper audit your double A paper, F8 paper. In F8 paper, there is a chapter in your book using the work of others. Auditors also do this. Just think, auditors are not engineers. Auditors are not engineers. Auditors are not engineers. So, for example, they are going in oil company for inventory count. So they don't know all the technicalities of oil. So definitely they have to hire the specialist. They have to hire the specialist, right? Okay, so it's better. If you can't do certain things, you have to hire a specialist, and you take consultancy. Now, one solution of this is engage a specialist consultancy, so that the risk is minimized. Chief accountant should also consider that whether the data on distributed ledger breaks the confidentiality principles. Yes, just think, as he has private reservation that the due diligence and the law issues. So there is a possibility that things gets leaked. There is a possibility that the confidential information of the company or investors got leaked, right? Because only some authorized people knows the reality. Everybody does not know. Now, as the technology allows, few minutes are left, please concentrate. As the technology allows resale of the shares of property, so there may be possibility of illegal transfer of the title of ownership. Would be that would be costly and time consuming to resolve. Yes, listen. Now, why they are implementing this blockchain technology? They are implementing it so that the shares of the property can be bought and sold through that blockchain system. One practical thing, let me tell you. You know, sometimes in past, how you invest in properties, you used to buy complete property. But now, in this technological age, listen to me, in this technological age, you can buy 1/10 of the property, 1/100 of the property. So in the stock market, there are different mutual funds. Different mutual funds related to property market. And if you buy that mutual fund, if you buy that unit of stock, if you buy that unit of shares, automatically you are getting exposure of property market. This thing is written here. That means you can buy or sell your shares, the shares. You can buy or sell shares through this system. But yes, as this system, listen, these are the risks. As this system is unknown, is not known to everybody, only few people knows. So yes, it may happen in past that they do illegal transfer, that they do illegal transfers. Okay, so that's also risky. And once this illegal transfer is done, then it will be very costly and very time consuming for the organization to resolve it. Okay. Now, these, in the red pen I have written some in the red pen. See, I've changed the color. In the red pen I have written some safeguards. He should inform the board. He should inform the board for his reservations. He should inform this issue with TCWGC, those charged with governance. And as a last resort, he should go for resignation. As the last resort, he should go for resignation. So these are some of the famous safeguards. Now you may ask, sir, you haven't discussed that issue. You haven't discussed the first issue. You haven't discussed the first issue. The first issue. Listen, the first issue is that the Badoni company. But before I start the Badoni company, let me write something. Some accountant lose objectivity because of pressure, and normally this is seen in newly qualified accountants. This is the real life issue which I have written here. And why I have written here, because in the question, in the last line of the question, they gave us the hint. In the last line of the question, they gave us the hint that this accountant is newly qualified, that this accountant is newly qualified. So we have to just discuss first that it's easy to manipulate, it's easy to pressurize these new guys, and write the reasons as well. Because of lack of experience, because of lack of experience and low financial background, because initially the guys are not that much rich as compared to seniors. that's why seniors that's why senior easily pressurize them. Now the last thing, because of lack of experience, chief accountant has created a self-interest threat. You know the self-interest threat: you scratch my back and I'll scratch yours. You scratch my back and I'll scratch yours. What chief accountant was doing? Chief accountant was delaying the payment for that Baduni company, and in return they were giving that letter. In return they were giving the letter, as he has personal personal interest in allowing Baduni company to pay reduced amount 1 month after the signing of contract. See, this I again copied from the question, and don't worry about it. Don't feel that this may that you will lose marks because of it. No, examiner has openly told this to discuss like that. Now, as he's getting employment reference in return from Badoni company, the pressure for applying for permanent job has inappropriately influenced his professional judgment and behavior. See, now he's not acting professionally because he is in pressure. There are two pressures. First pressure is he wants to grow. This is also a pressure. And the second pressure is he thinks that if he does not allow this extension of credit, the customer will run away. Okay. Additionally, there is a self-interest threat of losing. Additionally, there is a self-interest threat of losing this client Badoni company, which in reality creating an ethical issue, right? Okay. So I have written many points in front of you. You can easily use it, and I'll send you guys, don't worry, I'll send you the PDF. But one thing very important for you: try to write questions. Many students, what they do, they do it orally. So if you are not in habit of writing it, you won't be able to produce in the exams. It's all about practice. And by writing things, listen, your fear will vanish with time. It takes time, yes. Okay. And it's better